If you think operating cycle and working capital cycle are one and the same, you can be wrong because there are differences. Let's understand through a small case. X Limited is holding raw material for 30 days. Production process takes 15 days. Finished goods are held for 15 days. Customers take 30 days to make payment and suppliers are giving 10 days credit. If this is the background, find out the operating cycle and working capital cycle. Explain the reason for difference between these two cycles. Okay, let's understand. The focus of operating cycle is basically the time period. That is, for how many days I'm going to hold the raw materials. How many days are required for production process. For how many days finished goods will be held. How many days of credit will be given to the customers. So, it focuses the time period from raw material purchase till the cash collection. So we can say the operating cycle is inventory holding period plus debtors collection period. Look, the focus is on the period. That is for how many days these are held. But the working capital cycle also factors the credit support received from suppliers here. You take the case of inventory holding period. This inventory is going to have raw materials also. Let's say the raw material suppliers are giving 10 days credit. Then it means you are going to hold inventory for certain number of days, but of that 10 days is supported by the suppliers. We have to factor that, right? So what we do from the operating cycle, what we have calculated, we will deduct the creditors payment period and that will give the working capital cycle. Let's go back to our case itself to have better clarity. In the case it was mentioned, raw material will be held for 30 days. Work in progress is 15 days, finished goods is 15 days and debtors are going to take 30 days. It means the operating cycle of this business is 90 days. Why? Because they are holding inventory itself for 60 days and customers are taking 30 days. So this just looks at the period. Operating cycle just looks at the period. But working capital cycle will look at the other sources of credit available for this working capital. Already we have calculated operating cycle is 90 days. But we know creditors are giving 10 days of credit, right? So if we knock off that, we will get working capital cycle. 90 is what this business normally maintains, but 10 days is already supported by the creditors. So the working capital cycle is only 80 days, only 80 days. So the reason for difference between these two cycles is the credit provided by the suppliers. Operating cycle focuses exclusively on the holding period, whereas working capital cycle focuses on the holding period adjusted for the credit availed. Do you wish to learn more? I invite you to check our Diamond Live membership. This is a membership program which will give you access to 130 plus pre-recorded online courses related to banking, credit, finance, accounting, costing and so on. It will also give you access to 100 plus ebooks related to these domains. Gives you access to all the live classes which we are going to conduct. Will also give you unlimited access to all the future e-publications in the form of courses, ebooks, templates and so on. So this membership program is only for those who want to be a lifelong learner. So if you are a lifelong learner and if you want to make use of this opportunity, you just have to WhatsApp me Diamond to the number seen on the screen or simply comment DUM. I will share you the details.